Hi everyone, welcome to another episode of SeedlyTV. In today's episode, we'll be looking at gold. Now, gold is a symbol of wealth and status that has lasted for centuries, and it's one of the most beloved and influential commodities in the market today that has been around for a very long time. In fact, it's been used as money as early as even 40,000 BC. With an average daily trading volume of US $183 billion, this is according to the World Gold Council, it is one of the largest financial assets in the world with diverse sources of demand, such as investments, jewelry, and even as a component in technology. It's highly liquid, it's nobody's liability, it carries no credit risk, it's scarce, and has been able to preserve its value over time. So why aren't more of us talking about it? And more importantly, why aren't we investing in gold? My name is Kenneth, Marketing Manager at Seedly, Singapore's biggest personal finance community. And today I have with me Chief Operating Officer and co-founder of Hugo, Ben Davies. Good evening, Ben. It's great to have you here with us.
Hey, Ken. It's the Ken and Ben show. I just realised.
Ken and Ben show. Yeah, it is.
Look,
So
thanks
we're
very
going to
much.
be talking about. So yeah, we're going to be talking about gold and whether it's really a good investment or not today. And hopefully we'll be able to get Ben to also share some of his investment insights and secrets too. So let's get to it. All right.
Great.
So Ben, I know that you've spent close to 20 years in alternative investment management and trading. So what's your take on gold? Are you pro gold?
I'm going to age myself a bit more. I think I stopped writing in my CV that I'm 25 years plus. So I've kind of curtailed it at 25, but I'm probably into my third decade now.
Okay.
So I actually came from a background of trading interest rate swaps first and foremost, which gave me a really good insight into the plumbing of the banking sector and really beginning to understand what money is. So historically, gold has been money, but for years, for many decades, it's really been sidelined in terms of that concept. It's not legal tender. You can't pay for your transactions. You can't pay by decree your taxes in gold. And really since 1972, when President Nixon very famously shut what was called the gold window, gold ceased to back the reserves of central banks and federal deposits around the world. So actually, ironically, by banning gold or reducing the sort of backstop of gold in the system, that was the biggest testimony by the US government that gold really had value. Because at the time, the way the gold standard worked, people were wanting to settle trade balances in gold. So very famously, Charles de Gaulle used to send the naval ships across the Atlantic to go and pick up the gold to settle these trade imbalances. So Nixon turned around and went, oh my gosh, we're going to lose all this gold from our vaults. We're not going to let them have it. We're going to move to a new standard, which, as you know, is the current modern day fiat currency system where it's not tethered to any gold. So my take is that I've said for the last decade, and it still remains the same, gold is still largely misunderstood. It's underowned and it's highly undervalued, and particularly now. And I can talk later as to why it's still undervalued.
Sure. Okay. So I know that you are currently also serving as the CEO and co-founder of Hind Capital, which manages a gold fund. So what kind of retail investors do you see who are interested in investing in gold? And what's the age distribution like? Are they really, really young, or are they really, really old, or is there like a middle ground?
I mean, just to clear up perhaps some data points there. So I am still officially the CEO of Hind Capital, which was an alternative investment fund I set up over a decade ago with a fellow partner from my investment management trading days called Mark Mahaki. So I am the head of it, but actually it is run by other members of that business. So my full focus is on Hugo. My entire waking moment is focused on Hugosave, just to sort of give you sort of context.
Got it.
But I think it's an interesting segue. So why did I set up Hind Capital? Because that led me on the journey into working with my fellow co-founders and all the team at Hugo today. and wanting, ultimately to sort of dispel some myths around gold and ultimately democratize by creating accessibility to gold and other investment products. But in 2007, I was in a very fortuitous position of working within one of the major investment banks. I was head of interest rate trading, and I was getting a first-hand insight into the build-up in credit in the system, which I concluded would lead to a credit bust, possibly of the magnitude that we ultimately got in 2008. And I knew that in that environment, that gold, which was just a moribund asset at that time, had just been completely forgotten about by investors. Now, I'll tell you this at the time, in 2007-8, I think just in 2008, CNBC and Bloomberg didn't even have gold or silver as a ticker on their screen, just to give you an insight as to how forgotten about it was. So I set up a hedge fund, an alternative investment fund, which was for institutional investors to buy physical gold. And we had a strategy that gave them a bit more return above the gold price and also investments into gold mining stocks. But it was in that journey in 2008, we were writing investment letters, which were freely available. We were wanting to educate people. It was a way of, I guess it was one of the early forms of sort of content marketing looking back for a hedge fund, which was a bit unusual because our minimums were like $1 million. But we realized we were being inundated into our info at High Capital. I mean, and I say inundated, it was tens of thousands in the end of conversations about what do I do? The world's ending. People were really scared. Their financial well-being was being ripped up. If you think about when you threaten someone's daily living and money is suddenly disappearing, it's incredibly unsettling and frightening. So we opened up our ability to let in smaller investors with smaller amounts, but it still wasn't enough. It was still tens of thousands of pounds. And so we got to thinking in the technology world, there was no digital proposition to buy physical gold. So I ended up co-founding in 2015 now. Our first application was called Glint Pay, which enabled people to buy small denominations of physical gold. You could swap it multi-currencies, and you could spend it on a MasterCard. And still goes to this day, great learnings out of that. I was fortunate enough to meet my co-founders, and we just realized that actually there was a better way of presenting gold and investments. And that was why I've now founded with those guys, Hugo. And in terms of to answer directly, for the retail investor, we've dispelled the myth that gold is for the reserve of the wealthy. Anyone can own gold. But before, it was always like a tola bar or an ounce, reasonable amounts of, and in physical form that you hold candidly in your home, which is not secure. If your house burns down, it's going to be melted. If someone comes to your house and knocks on the door with a big gun or a stick, you're going to have to give up your gold because it's just not worth it. Preservation of life over preservation of wealth. So what we've done is go, hey, look, you can buy literally a cent of gold, but it is backed by physical gold held in secure vaults, Brinks, in Singapore in this case, in the free zone. And as a result, it's just opened up a whole market of people to give them instant access and instant liquidity on an asset that ordinarily they'd have to put rather large sums of monies into. So that then allows you to start buying. Our mantra is a little, often, and early. That's our base state. You can either do large sums or small sums, but if you do small amounts every month or large amounts every month, you start averaging in, and then you can really start to compound returns. So I hope that's quite a full answer, but I hope that answers your question.
Pretty much. So what I'm hearing is that with Hugo and whatever it is that you do with your co-founders, you're pretty much bringing gold to the masses, making it accessible as possible to as many people as possible.
Yeah, and look, there's lots of Hugo 1.0 is a digital account. We enable people to spend, save, and invest. At the moment, they can use a Visa Platinum card where they can spend on that card, and they get what's called roundups, which literally means every time you do a transaction, the difference between, let's say it's a coffee, it's $2.40. We'll round it up for you out of your account to $3, and we'll take 60 cents and put it into what we call a roundup ledger. And then every week we invest that automatically into gold for you. So we start taking you on that little, often an early journey. And then you start to begin to understand, what gold is and how it moves and what it can actually mean to you in a much more tangible form. And then you can start to, as you get more comfortable, you can buy ad hoc amounts of gold on the trading, on the gold platform, very easy in what's called our gold vault area. Because definitely our mantra is about, we're wanting to get those people who perhaps procrastinated about beginning to save or invest. People just genuinely don't save enough. There's so many headwinds, right? Inflationary headwinds. People are hit with what I call clickbait, which is instant access credit, ability to buy on Amazon in a heartbeat. We're just constantly, it's all about consuming. We're reversing that journey and saying, how about get on a savings journey, then think about what you can consume excess beyond obviously your everyday expenditure. So in terms of the application, our Hugo 1.0 also allows you to do money pots that you can save for rainy day, just putting money aside. But ultimately, as the application evolves next year, we're going to give you so much more opportunity, whereby we will create effective savings for you on our spend, what we call our spend pillar. So we're building a marketplace where you can get ability to get reductions. Let's say substitute. You don't want to spend for a coffee at Starbucks. You might want to go and get a Kopi instead. You might want to switch out of a utility provider into another one. Imagine a user gets all of that experience. They're going to save hundreds of dollars a month. What we then do is take those effective money savings and then auto invest it for you, potentially into gold or a choice of 1 out of 3 investment portfolios that we're creating right now. So actually Hugo is so much more than gold, but gold for us is the bedrock, foundational bedrock of any portfolio, or just owning it in its own right. And we can talk about, why that is.
Got it. So we'll put a pin on that for what Hugo is about. So we'll come back to that in a little bit. So I think right now, maybe for the audience who are tuning in, they're wondering, okay, so once it's about gold and, should I really invest in it? Maybe let's put on a lens of understanding what gold is about. So at Seedly, we've got a really vibrant community consisting of users from all walks of life. And most of the time, we see a lot of discussions that are centered around what's the next tech stock to pick up, or what kind of cryptocurrency or decentralized finance system, for example, is going to be the next big thing. So when I tried searching for discussions about gold, the latest one I found was back in September, where a Seedly member asked, is there still a place for gold investing today? Do you invest in gold currently, or do you think long gone are the days of gold investing? So basically, this community user feels that pretty much no one really invests in gold these days, with all this craze over the equities as well as crypto. But when I looked at the discussion closer, I kind of get the impression that a lot of people don't really understand what gold is. So like what you mentioned, it's very misunderstood and often neglected commodity as well. So I did a little research to find out what are the reasons to invest in gold, right? So I think one of the most common thing that comes up is that it can function as an inflation hedge. So for the viewers back home, inflation pretty much means that as time passes, the purchasing power of your dollar or Sing dollar will decline. So this is why our parents and our grandparents used to be able to buy a plate of char kway teow for less than 50 cents, whereas today, that same plate of char kway teow will cost you anywhere between $4 to $5. So if you bring it to property, right? So it's a huge thing for all Singaporeans to own property. So back in the 1980s, a brand new 4-room HDB flat will cost you something like 80K. And if you fast forward to today, a brand new 4-room HDB flat is going to cost you something like 300K and above. And this is like, we're not even talking about the mature estates, right? So does this mean that the value of the house appreciated, or did the value of the Singapore dollar fall? Now, what if we look at the same house using gold as currency? So back in 1980, gold was selling at about Sing dollars, $30 a gram. So if you bought that a 4-room flat using gold, right, it will cost you 2.67 kg of gold. And if we jump to 2021, where the average price of gold has risen to $78 per gram, the same 4-room flat will set you back 3.85 kg of gold. So what does this mean? Basically, gold's purchasing power has remained relatively stable over the 40-year period, but the value of the Sing dollar took a downturn. Now, we have a question from the Seedly community which addresses this very interesting point. So this user asks, so what is the real intrinsic value of gold, and does it really make a good hedge against inflation? So Ben, maybe you have a perspective on this.
Yeah, so I'll answer that question directly, and then I've sort of got an analogy for you about the portfolio diversifying and
Sure.
and having a COVID booster. But that's a great question. The real intrinsic value of gold. Gold in many ways has no utility, right? So maybe it's used a little bit in, in some digital devices in very small amounts. It's maybe a little bit in dentistry. Obviously, it's got utility in terms of creating jewelry, so for adornment. But in terms of sort of what I would call digital manufacturing utility, it really doesn't have any. So it very much, as a result, its intrinsic value is based around what is the cost of mining to get it out of the ground each year, to create a level of supply relative to all the gold that's ever been mined and has been used. So I would say that mine supply is running at roughly around 2.5%, 3% of the above ground gold that's ever been mined, that we understand to be mined. I would say 60% at least of that gold is never going to come back into what I call into the marketplace, because it's either historical artifacts that sit within museums, art, etc., and also there's investment and reserves held at central banks. So in terms of the intrinsic value, you have to put it down to, well, what does it cost you to get it out of the ground? That's its first sort of premise. So the marginal cost of gold and mining it really creates a floor under it. And there is no doubt that the higher that mining cost comes, the more that gold will appreciate relative to that price. So ironically, how does that relate to making it a good inflation hedge? The very inputs that go into mining are obviously inflationary, part of the inflationary supply chain. So, what's required? You need certain other commodities in order to extract gold. You need machinery. You've got supply chain logistics. So these are all areas where you would start to see inflationary pressures from goods. And then obviously from a labor standpoint, if there is not enough expertise, or you have something like a pandemic where literally you just don't have enough people to get to site or allowed on site because of COVID effects, all of these create an inflationary impact which underpins that cost and then the price of gold. So in that regard, that's why there is a potential for the inflationary hedge. But actually, it's born out of millennia. Gold is got very high weight to high value to density. Sorry, rephrase that. It's a high value to weight ratio.
Okay.
So it's sort of heavy, but a small amount of gold relative to its value. So it becomes very desirable in terms of ownership. You really can't print it in the same way that you can print fiat currency. So because that supply is coming out at 2.5% that I just said, relative to the population growth, that is why it maintains stability. So if you think about that, as prices start to rise elsewhere, and what is a rise, a price increases, what we refer to as inflation, is actually a symptom of the increase in the money supply.
Okay.
And we know that the money supply, like M3, has ballooned even since 2008 when we injected it. And that M3 is really sort of credit as well, but it's gone to like 21 trillion from, call it 6 or 7 trillion in the US alone.
Okay.
So if you've got the amount of dollars in circulation is going up or currency is going up, and yet you've got this finite amount of supply pretty much, or a very low supply of gold, this is going to create an amazing inflationary protection, right? Because that supply is not changing. Hopefully that answers it.
Okay, gotcha. All right, I think that's a very good explanation of like how is it a good hedge against inflation. So maybe I'll quickly move on to what are the next few reasons to invest in gold. And I think one of the other thing, it's a very huge thing. It will be that it's a store of value, right? So it protects wealth. Because like as you mentioned, so like the price always rises steadily over time. I mean, if you look at this chart right here, right, there may be dips from time to time, but overall, we do see that it's an upward trend, right? So in fact, even in times of economic uncertainty, it drives more people to invest in gold, which in turn pushes the price upwards, right? And it also gives you, like what you mentioned earlier, portfolio diversification. So the price of gold usually performs well in times of uncertainty, and is usually used as a way to balance volatility and returns within your investment portfolio. Yeah. Now, I think this is something that a lot of investors or have seen or read somewhere, that it's some sort of an insurance that protects you against a wealth wipeout during severe economic depression, or sort of like, say, maybe a stock market crash, right? So I guess this brings me to my next question. So how exactly does gold help to balance an investor's portfolio? Do you use that particular portfolio and you sell it bit by bit during a stock market crash to get liquid cash? Like how does it exactly work? As a means of protecting yourself against a wealth wipeout.
Yeah, I mean it's a good question. It's like what are the mechanics as to why that actually works? I mean, obviously the key thing there is that store of value is what ultimately, obviously that's why it's an inflation protector, right? So I was going to say my analogy earlier, and then I'll explain the mechanics was, so if you think that gold can act as a portfolio diversifier, a bit like a COVID vaccine or a booster vaccine, it will absolutely inoculate you against the worst effects of the disease. In this case, of the disease is inflation or deflation. We talk about gold being a constant. In fact, there's a very famous book where it's literally referred to as the golden constant.
Okay.
It's because of that dynamic of supply, a constant supply that's very measured relative to a rapidly increasing supply of money, which has been occurring since 1929 when we actually moved to creating the Fed's, or 1933, I think it was, that we created the first central bank, the Federal Reserve Bank. And they started to manipulate the backing of gold to currency. So if you think, what is a restraint on issuing currency other than a human being saying, I'm not going to print any more money? Well, human beings aren't really that trustworthy, are they? Under duress, they tend to do things that they perhaps shouldn't do. And if you've got significant overspending and fiscal burdens, and you've got to keep the populace and welfare happy, there is a tendency to want to, we'll just leak a little bit more money into the system out of thin air to pay for things and everyone will be happy. Well, eventually that catches up with you, doesn't it? You can only rate the piggy bank so much. But gold ultimately creates that inoculation. So I think of gold very much being the restraint that if you back an amount of currency to gold and you keep that constant, we won't get this disruption in price inflation or deflation. Now, remember in 2008, right? Gold did phenomenally well when stock markets started to quiver and ultimately fall. When any other asset class starts to fall, whether it's bond prices go down, whether it's stock indices go down, components of individual stocks, whether it's commodity baskets, gold is an even better inflation or deflation protector than even a commodity basket, because it is the purest asset in terms of supply relative. So, yeah, ultimately, I would say that the mechanics that if you own broadly, and this is where you can back test, and history has shown this, that even in the 50 years since we've not had currency backed by gold, in modern financial investing, and think about this, right? We're living in a modern economic era that's really, and investing has really only been around for 60 years. We're still a social experiment in the working, which is why what's happening with cryptos and digital currencies is really, really manifestly important, and we're going through something quite phenomenal. So we've still got this very fledgling sort of monetary system, and in terms of how gold right now sits in a portfolio, if you have somewhere between, let's say, 5 to 20% in physical gold, you had 20% in world equities, 20% in government bonds and credit bonds, maybe then a 20% money market, cash market. So let's call it broadly, you've got 100% across 5 asset classes, of which up to 20% could be in gold. That will act as an incredible diversifier. So when all those assets are going down, this will remain constant, if not going up in value, because people switch out of those equities and bonds and find a safe haven in gold. That is the mechanics, and that is a psychological behavior of investors that still hasn't broken down, and won't break down, because of those unique special properties that gold supply isn't increasing relative to the money supply.
Gotcha. All right then. So we've covered a little bit of the reasons as to why we should invest in gold, and I've also looked at the risk involved when it comes to investing in gold, right? So when it comes to exactly like what you mentioned before, storage of physical gold, as well as the ongoing costs, keeping it at home, you're subject to the burglary and theft, and if you are going to use if you don't store it yourself and use a pool account to store your physical gold, you're still going to have to pay storage and insurance fees if you're using an allocated account. And if you use an unallocated account, there's risk as well, right? Because you might lose your gold if the company goes belly up. And as you mentioned earlier as well, gold is pretty much there's no utility, right? As Warren Buffett so very famously said. And it basically means that it doesn't produce anything when you own it. It just sits there. There is no passive income. It's not like stocks or bonds, which gives you like some kind of coupon rate. And lastly, I think like the most interesting thing, or rather the most I think the thing that probably is a bit hard for a lot of young investors today to try and cross this hurdle is that it generally has a very poor historic record, right? So it's like a low risk, low reward kind of situation. So let's say if you were to put a US $10,000 in gold, right, and another $10,000 US in an ETF that tracks the S&P 500 perfectly. Okay, I'm just going to make this a very simplistic comparison. I'm going to assume that I'm just going to ignore any reinvestments of returns, fees, taxes, and so on and so forth. So if you do that back in, sorry,
which is a big part of the gains, right?
Yeah, I mean, so if we were to do it back in 1980s, so 10K in gold or 10K in an ETF that tracks the S&P 500, right? And we fast forward to today, that gold would be worth a total of US $30,000, give or take, right? Whereas the S&P 500 is going to be worth, your portfolio is going to be looking at something like 340,000 US dollars. So which brings me now to neatly to the next question, which I believe is on everyone's mind right now. If gold has such a poor historical record, is it even relevant today for young investors?
I can't. Those stats might be right. They look a little bit high. They do look a bit more like that's the reinvestment component as well.
Yeah.
The point of gold is what protection can it give you relative to the currency that you own? So for Singaporeans, it's the Sing dollar. It's been a pretty strong currency for a number of years. You've had fiscal sobriety, let's call it, i.e., you've been, your government's been pretty sensible despite the amount of welfare that you provide.
Okay.
But I suspect that you will start to see the Sing dollar start to depreciate quite significantly against the US dollar. And so I would expect Sing dollar in gold terms to rise quite significantly.
Okay.
In terms of the realities of should I invest in an S&P 500 versus gold? Gold is not there to create wealth for you. It is there to protect wealth, but it also acts as a really great savings, a very low risk over actually even the medium term horizons. Acts more like a savings account. So for example, in US dollar terms, it's appreciated 7.82% on average over the last, since 2000. Since 1980, I think it's 6%. Broadly. So these are significant returns relative to the inflation rate. Now, in countries where you have a higher inflation rate, like often you do in the Asian market, where interest rates are higher, but what one has to think about is real interest rates, i.e., what's the nominal interest rate, i.e., what's the bank interest rate minus the inflation rate. So if I've got 5% bank rates, overnight deposit rates, let's say, versus inflation at 10%, we've got a negative real rate of negative 5%. Gold, that's another expression of saying the money supply is going up, remember, and the manifestation of which is higher prices in goods and services. Gold has remained constant. Gold performs phenomenally well in those environments. So we're entering into still a period where even if interest rates, the policy response from central banks is to try and anchor back on some of this inflation that they're seeing in the system, which is not temporary. You get tipping points in people's psychology. The moment people perceive that there is inflation in the system, they go to buy goods sooner. The reason why I think there is more insidious inflation in the system now is, for the first time, non-skilled workers actually have demand rights on wages. And once you get push inflation from wage demand, that is when you start to see prices really begin. That's why producer price indices and consumer price indices are starting to remain high. And Chinese PPI, so producer price indices, is really starting to go up. That is going to reflect around the world because they export a lot of that to people like us. So we're going to start seeing those numbers go up. But to probably sort of gone off, digress slightly, you can see that by owning some gold, it's a great savings it's great savings in of itself. Of course, at a younger age, you can have more risk in the stock market. Now, stocks have really benefited, as has housing in the last 2 decades, from that increase in the money supply. So we've really had hyper asset inflation. I would say that stock markets are, by any metric, their forward valuations are excessive, meaning that the valuations are so high relative to the actual earnings these companies can probably produce over the next decade, even allowing for the innovation of the big tech companies we're in the exponential age, right, where everyone's putting a really high value on your ability to create a network that you can monetize.
That's true.
If you're Amazon, I'll give you an example. If you're Amazon, 84% of Amazon is based in America. They haven't even started to touch doing e-commerce in the rest of the world. When they start to do that, again, that price of that stock could continue to rise, or is the market already pricing it in? But we've also got this confluence of the age of digital, exponential network effects at a time, this confluence when money supply is being injected into an amount of almost finite issued stock. So it's like a jet hose of money going into up a straw. It's accelerating it to the moon. So I don't think stock markets are at the appropriate prices. And what we're going to see is over the next 5 years, a rebalancing between stocks, bonds, and gold. And I would say for viewers, I think that gold, relative to the monetary increases and stock markets, is extremely undervalued. And I think will go up probably 3 to 5 fold over the next 5 years.
Got it. I hear you. So if I were to summarize this for our viewers back home, so gold is pretty much, you got to know what you're in it for, right? So for gold, it's not so much about creating wealth, but more for protecting wealth in a nutshell.
Yeah,
Right. So
and
then,
it's a great savings. It's much better to save in gold on a monthly basis. There's no anxiety with it. There's volatility in all stocks. I mean, you have Amazon stock, one of the biggest stocks in the world, can move up and down 15, 20% in a day. That is insanity, right? How can you have a basket of stocks moving around 5, 6%, and then people say gold is volatile, for example? It isn't. The daily movement on gold, couple of percent. The monthly movements, couple of percent.
I hear you. Okay, so now for those of you at home, if you're convinced that gold is the way to go, to protect your wealth, so there are a few ways of investing in gold, right? So the most common ones would be to buy gold bullion, to buy jewelry. You could buy gold certificates, even futures. You can explore gold-related ETFs, even gold mining stocks, or even gold accounts or funds. So
Yeah.
I think one of our users just asked a very good question, right? So we could just pull it quickly up here, right? So he would like to know for Ben, what is the best way to buy gold? And should he do it on an averaging basis, or should he target for some kind of a percentage holding?
John Gold is a very smart man. He's obviously rolling the World Atlas up a mountain. I think I know that name. So yeah, the best way to buy gold, it is definitely, you want to have the most cost efficient way to do it. Historically, I think the gold industry was a legacy industry with bad servicing. There wasn't really digital propositions, not even really websites until 2007-8. And it was very expensive. If you buy coins, there's what's called a fabrication cost when they have to be melted in casings. Could be up to 5-6% on top of the gold price. That's incredibly inefficient, right? Excuse me. You've just lost a whole year's worth of returns by paying that premium, right? And when you go to sell it back to the bullion dealer, I can guarantee you it's the gold price without, he's not giving you the
I'm sure, yeah,
the 6% back. That's in part their margin, but it's also the true cost of fabrication. So that's not a good way to do it. Storing it in a vault of your own, you need large bars. So that could be a full market bar, as they're called, what's called a London Bullion Market Association bar. That's 12.5 kilos broadly, probably about $450,000 worth.
Wow,
that's out of reach of most people, right?
Yeah.
So for the everyday man, like ourselves, you got to go out there. How do you buy it? You want to come to a digital proposition that is backed by physical gold. Well, amazingly, that's what Hugosave has created, which is the ability for you to instantly access buying some gold on a monthly basis, on a daily basis, and it costs you far cheaper than anywhere else because you have instant access, instant liquidity. And the beauty is we have consumed all that cost really of major storage. There will be some form of storage fees, but it would be a lot greater if you were to go and do it by yourself. We benefit from the economies of scale of being a large company and having hundreds of thousands of people invest in gold with us. So we can then negotiate with the vault providers because they will give us better rates on that volume. So definitely buy in on an average basis using something like Hugo.
Got it. Great advice there. So, well, I mean, now that you're talking about
unbiased advice.
Sure. Well, I mean, well,
but
now that you're touching
Hugo, it's the truth.
Sorry,
I'm interrupting, but it's the truth. It's the reality. It is the most cost-efficient, easiest way. A 2-year-old, it's so intuitive to come into our application. You know how kids play on iPads? They just know where to go instantly. You don't have to teach them. We like to think our user experience is like that. If you've never bought gold before, it's really easy. You can come in onto our platform and there's a few guidelines there in video, but really you'll figure out in 10 seconds. So easy.
I hear you. Well, I mean, since we're on the subject of Hugo, right, I think for those viewers at home, if you are not familiar with what Hugo is, it pretty much is, well, how do I say it? It's so when you sign up for a Hugo an account, right, what you get is like what Ben has shared earlier is that you get a Hugo Platinum Visa card. So this is a debit card which you can use to charge your spending to, and as what Ben has also shared earlier about Hugo Roundups. So what happens is that if you say, let's say if you were to spend like $5.50 on a cup of bubble tea, right? So Hugo Roundups will automatically save your spare change. They'll round it up to the nearest dollar, 50 cents, right? And then that amount is all accumulated and is invested into gold to preserve and grow the value of your savings over time, right? I mean, so for the investors back at home, when they're using Hugo, are they able to buy and sell gold as well on Hugo?
Yeah, absolutely. So think of it very much like very similar to a bank account, but with so much more. Our underlying bank account deposits are held at DBS. It's a Hugo account. So you've got your spend account, like a current account. You can deposit X amount of money and you can spend on a card, as you just said. You can do roundups, which first introduce you to investing in gold because you do small increments when every time you transact. If you've turned on your roundups, we literally it's the digital analogy of I've got spare change. I come home in the evening, I throw it in a pot in the corner. We call it our silent savings because you almost don't know you're doing it. It's almost imperceptible to the point where we've even thought about doing power ups. So you could have roundups. Let's say you're doing $5 a week. You could do multiplied by 3. So you could click a button that says, you know, power up to the 3. So you get $15. So if you've got $5 ordinarily, we'd multiply it by 3, you get $15 in that week. But actually there comes a point where you keep that. You don't want to power up too much because it is that classic silent saving. It just accumulates nicely in the background, and you can have more concerted times where you can buy and sell the gold, or in ad hoc go and buy the gold, or schedule larger amounts. So yeah, it's really easy. You put the money into your account as a transfer in. Soon we'll have direct pull. Actually, all e-money companies until recently have not been able to pull directly into account. You actually have to send it from your own, let's say your DBS account or UOB account. And then it's literally you go into the gold vault on the application and you just key in the amount you want to buy and press buy. It's that simple. As I said earlier, it's just so intuitive. I defy anyone not to be able to do it.
Great.
I'll give them a whole gram of gold if they say they can't do it.
Okay, so viewers, I hope you heard it here, yeah? So if you find that you are unable to navigate the Hugo app, just check in with Ben. It's a grab and go for you.
You have to come and get hold of me personally in the UK, though. Because of the pandemic, I can't get to see you guys in Singapore, and it's rather frustrating.
I'm sure that they'll find ways to get a hold of you. So I think one very big question that some of the users have with regard to Hugo itself, right? So is it safe? So we have a user who's asking, so where's the gold held? Is it in a custodian vault, or is it safe somewhere in Singapore, or is it in the UK, where you're at right now?
Yeah, no, great question. I mean, I think I touched on this earlier. So all our gold is physical gold that is you own fractions of a bar. It's legally owned by you. If you look through our terms and conditions, that in the event, the very unfortunate event that should we go into administration, which is not going to happen for various reasons, we're a well-financed company. That would only happen under the extreme duress. So in that situation, the counterparty risk is 0. The gold would be legally yours. We have no legal title over it. Importantly, in terms of the gold is guaranteed and insured by Lloyd's of London as well. So again, if we were to be in an exceptional situation where we had administration, it would all be guaranteed anyway. So it's held in Brinks Vault, probably the leading vault provider for art, precious metals in the world. It's held in Singapore, in this case, in the free port, in the free zone. I think it's just under the airport or near the airport. And yeah, so I think it's completely safe. I use it myself. I have absolutely no anxieties. Where I do have anxiety and is that I have historically had some physical gold in my home. And I've had typically, the moment you mention to someone you have it, you're a target for someone knocking on your door and stealing it, holding you at knife point or gunpoint. 2, if your house burns down, you're going to lose you're going to lose your metal, apart from all your goods. So why would you do it? It's so cost effective and so safe to put in a custodian vault. And we've just made that so much cheaper and more accessible by, we've moved into the digital age, right? And just making it simple for you to do that.
Got it. Great. Thanks for sharing. I think there's a lot of good things that we're hearing about Hugo, so much so that I think one of our users out there is asking, is there a sign-up incentive or reward if you wish to start buying gold at Hugosave today? We do have a very special sign-up bonus with Hugo. So just stay with us all the way to the end to find out how to get $20 worth of free gold. Right, you heard that right. So it's $20 worth of free gold. So it's not the 1 gram that Ben promised earlier. If you can, if you find it difficult to navigate on the UI of Hugo, but yeah, you can get $20 worth of free gold. Just stay all the way to the end, and I promise we will share with you what this special sign-up bonus is all about. So I see a lot of questions coming in right now. So let's move on to the Q&A segment. So
right,
I think
I've got to put my
thinking cap on.
hat, especially ready. This is B for brain power, so I can answer the questions. I typically wear a baseball cap. I feel more comfortable in a baseball cap, so I'm ready.
Gotcha. All right. So I think one of the first questions we got is if you can only afford to invest 1K per year into one asset, would you park it in gold or Bitcoin, the digital gold of this age? So Ben, what's your take on this?
That's a really provocative question, and I love it. I think you have to ascertain what you want out of that investment. Bitcoin is incredibly volatile relative to gold. It was first introduced as a peer-to-peer payment system. It's obviously now become this digital gold asset. I think it's fair to say its volatility is many multiples of gold. I don't believe Bitcoin is going to go to zero. I think that the encryption and the proof of work, and I think it's sound. I think there are some millions of very smart people who would have been able to corrupt that asset, or that digital proposition. But nonetheless, it's if you were to put money in that, almost certainly that has a higher risk of loss relative to putting 1,000 in gold. So if it's all the money I had in the world, I would probably put it in gold.
Got it. Hear you loud and clear.
Because that's the starting point, remember. Your base foundation, call it your Maslow hierarchies of investing. Get your portfolio base right. Get your savings rate up, which you do with gold. Then when you've got excess and you feel you want to speculate with a few percent of money you've got, then you start moving into cryptos or stock. Well, I'll go into stocks, bonds, and then you have a small percentage in cryptos. I'm a massive believer in the crypto space. And just because I'm involved in gold doesn't mean I don't have a big love for the new evolution.
Got it. I hear you. So get your foundations right, and if you want to experiment, you want to try something else riskier, you can go ahead with with more peace of mind, if you will. Yeah. Okay. I guess that's all about the time that we have today with Ben. So if you didn't manage to get to your questions, don't worry. All you have to do is you can scan this QR code, and it will bring you to the Silly discussion thread where you can ask your questions about gold investing, and Ben will get to them. He will answer them, and we'll let you know when he's done that. So if you've enjoyed this episode of SeedlyTV, right, so just make sure to follow us on our socials so you'll always be updated with what's new in the personal finance space. And lastly, as promised, here is the special link to enjoy the very special sign-up bonus of $20 free gold. So don't worry. The sign up link is going to be pinned in the discussion. So if you're on YouTube, on Facebook, you just need to refer to the discussion chat. You'll be able to access it. So if you're watching on YouTube, we'll drop it. We'll drop it there. On Facebook, we'll look at the discussion. You'll find it there. Yeah. All right. So I hope you've learned more about gold investing today. I think Ben, thanks so much for taking the time. And,
that's great. Thank you very much. Yeah, I really thank you for giving me the space to talk. It was very kind.
Sure, no worries. So if you're thinking about getting into some gold, make sure to check out Hugo. All right. Thanks, guys.
Thank you very much.